I would like, first of all, to thank the organization for inviting me. It's a real pleasure to be here today discussing and debating cross-border crowdfunding. By way of introduction, I'd just like to talk very briefly about Sitters and what we do, and give you some numbers, and then I'll go into the regulatory bit related to cross-border crowdfunding. So Sitters is the leading European equity crowdfunding platform. We've been operating since 2012. And we were the first equity crowdfunding platform to be regulated by the FCA, the British regulator. As far as we know, we've also been the first equity crowdfunding platform to be authorized and regulated by a financial regulator anywhere in the world. We have a very good relationship with our regulator since day one. And we've worked hard to help them develop what we believe to be a good framework for equity crowdfunding in the UK. We're members of the UK Crowdfunding Association, the UK trade body for crowdfunding, and we're also members of the European Crowdfunding Network. Within these trade bodies, but also at a more individual level, we've liaised with both the UK regulator, but also with regulators across Europe, and with the European Commission on different regulatory initiatives. So as a co-founder, I launched Sitters and started working on it back in 2009. While still at Oxford. It took us about a little bit more than 2 years to get the regulatory approval. Part of that reason was because we were the first ones, and as I said, there was a back and forth with the regulator trying to fine-tune the regulatory regime for us to be able to be authorized. We launched in 2012, and since then more than 600 businesses have raised finance through our platform. Businesses raising from as little as £30,000 all the way up to 5 million, which is the prospectus threshold in the UK. These businesses are mostly based in the UK, but not entirely. We've been operating as a European platform for the last few years, and we had businesses raising from us from Portugal, from the Netherlands, from Germany, Belgium, Ireland, Spain, among others. Through our platform, there has been already a little bit over 320 million pounds, so that's about 350 million euros invested, most of which has been invested in the last 2 years. So we've had very rapid growth since the beginning. So moving into cross-border regulation and cross-border equity crowdfunding. The present situation is not particularly straightforward when you're operating cross-border. So Sitters is a MiFID authorized platform. We're also regulated as a small alternative investment fund manager, but neither of these European regulatory regimes allow us to passport effectively cross-border. While we do have a European passport, there are significant differences in specific countries when it comes to crowdfunding regulations. And the inability to operate efficiently cross-border hinders not only our development, but any other equity crowdfunding, and I would say most crowdfunding initiatives to operate efficiently in Europe. Specifically in equity crowdfunding, Europe is the leading force in equity crowdfunding when compared to the US. The US started with equity crowdfunding later than Europe, and their regulation is less adequate to proper crowdfunding, but they're catching up. And unless Europe is able to operate efficiently as a single market, we will lose that leadership. So we've been involved, and we've provided input in the Capital Markets Union work streams since the beginning. We believe that crowdfunding forms a fundamental part of the Capital Markets Union mission. And we believe that the ability to operate efficiently cross-border is going to be critical for these operations. We are very much pleased with the Commission's initiative to regulate crowdfunding cross-border and to have a more homogeneous regulatory regime in Europe, and we think that the current proposal is adequate and is generally a step forward and something that we strongly support. I think, and we think that the approach is right. It's an opt-in regime that caters both to a framework that applies across Europe, but also caters for platforms that want to be MiFID regulated and platforms that want to operate under national regulatory regimes. So we believe this strikes the right balance from a risk, cost, and time to implementation perspective in a market that is rapidly evolving. That said, we do have our own contributions to the current proposal. All of these notes and all of these comments have already been shared with the Commission, so I'm not going to dive too deeply into the details. I'm going to give a high-level overview of what our position is. Our position will also be published in the European Crowdfunding Network's website very briefly, so you can also check the significant details. First and foremost, the most significant feedback we have relates to the 1 million limitation on capital raising cross-border. We have significant number of businesses raising way above 1 million. As I said, we've operated under the 5 million limit of the UK Prospectus Directive. And we believe that the number of businesses raising more than 1 million will only increase. We also believe that the 1 million limit doesn't cater to the types of startups and scale-ups that the crowdfunding proposal sets out to support. Part of the reason for this proposal is to address a gap that exists in terms of financing businesses that are going from the startup to the scale-up phase and are struggling to find adequate sources of financing. So while the 1 million limit caters perfectly to early stage startups, more advanced businesses, businesses that are either already scaling up internationally or are pre-IPO, which we have a few raising through the platform, will be hindered by the 1 million limit. This means that platforms operating under MiFID or under national regulations will have different limits and will be eventually at an advantage towards the companies that are operating under the European regime. So we understand that, we understand the alignment with the Prospectus Directive. We also understand that different countries want to impose different limits, limits that may be more adequate to those specific countries. And our proposal is a scenario where the limit is increased from 1 million to the maximum of 8 million, but where countries can still impose limits on the amount of investment coming from that specific country. This means that those countries' regulations will still be taken into account, and nationals of those countries and residents of those countries will not be able to invest more than the limit for that specific country, but at a European level, businesses will be able to raise more than the 1 million threshold. Other points that we would like to highlight more for clarification than anything else is, excuse me, is the fact that the way platforms operate implies that they have control over the flux of funds that are being invested. So, for instance, in the case of seeders, we accept payments through a third party that is fully authorized to accept payments. Those payments sit in a client money account that we control. Those accounts are obviously kept in a regulated banking entity. And then we transfer those funds to the businesses if they're successful in raising, or back to the investors if the business doesn't successfully raise the amount that they intend to raise. This flux and this process is particularly important to the way equity crowdfunding works. And we believe that the spirit of the regulation is to allow platforms to continue to do this through third parties, so they will not have to hold those authorizations. But the current proposal doesn't fully clarify this point, and we would welcome clarification regarding this specific subject. Also, the other point that we would like to highlight is marketing activity. Under the current regulation, platforms cannot market individual campaigns and cannot serve as marketing means for those campaigns. We support the view, and we fully understand why this is so. We are strong advocates for transparency and for independence of the platforms in relation to the campaigns that raise money through us. Having said that, the way we've been operating, we think adequately protects the campaigns and investors from discretionary power from the platforms. So what we do and what we believe is a good approach to this is we mention individual campaigns in objective and predetermined ways. For instance, we issue a newsletter every week where we highlight all the new campaigns that are on the website. We highlight campaigns that have crossed a certain threshold, and we don't highlight campaigns that we believe are more interesting to us than others. So we highlight campaigns under predetermined and objective metrics. And we believe that if it is done in this way, it effectively protects both the campaigns and the investors from platforms being discretionary about which campaigns to promote to their investors. So we would like the current proposal to allow for this kind of communication. Also, one thing that we tend to do is to negotiate marketing deals with third parties that we then allow our campaigns to take advantage of. So while we're not the marketing end means for those campaigns, we work as a facilitator in bringing those campaigns to the deals that we've already arranged and helping them promote in our partners. And we think that that's beneficial for everyone involved, including the campaigns as well. Another point that I would like to make is regarding SPVs. So Seedrs operates as a nominee for the underlying investors. That means that we aggregate all the investors that invest through the platform under our nominee arrangement. And while they are the beneficial owners of the shares, we are the ones showing up on the cap table, and we are the ones making the investment and signing all the documents and handling any votes that are needed afterwards. And we keep up with the investment all the way to a potential exit. We think that this is vital for the way equity crowdfunding operates. It's non-feasible for a startup to manage hundreds or thousands of investors in their cap table, and being able to aggregate them is particularly important. The current proposal allows for this, which we believe is important and relevant. However, we think that it would be beneficial for the platforms to be able to have additional authorizations in how they manage the SPV. So authorization to be able to execute the deal, to actually sign the documents and do shareholder agreements, and also to make decisions on behalf of the investors. This, in effect, maximizes the potential for returns for investors, and we think it's good for the market as a whole. Finally, I would like to address the use of secondary markets. So, Seedrs has launched its kind of secondary market on the platform very recently. It operates almost as a bulletin board and not as a multilateral trading facility. It's something that we're still developing and testing with and learning from. We want to take it slow because it has been tried before by other platforms and it hasn't worked particularly well. It's slightly tricky, and there are a number of unknowns involved in setting up a secondary market for shares in private companies that are so early on in their lives. Asymmetry of information, transparency, and so on are some of the issues that we're trying to address. Having said that, looking at the current proposal, it restricts the platforms from setting up a fixed price for the transaction of those shares. It is our view that this is contrary to the interest of the platforms, the investors, and the companies involved as well. As an entrepreneur and as a very active member of the entrepreneurial ecosystem, I know that from a founder's perspective, having the value of the shares and the share price fluctuate and being exposed to speculation is contrary to the development of the startup and of the business. The way we've addressed this is to limit the transaction of shares on our platform to the share price of the last round that the company did. So the last set price by an external investor. And we don't allow negotiation of that price, which means that the startup and the investor don't have to negotiate price and don't have to try to value the company because the company has already been valued in the previous round. We think that this is good for everyone involved. We think that this protects also the investors. And while I do understand the need to stay outside of the multilateral trading facility regulations and not to become one, we also believe that being able to set fixed prices for the transaction of shares is in everyone's best interests, and it's in the industry interest as well. So these are some of the points that I would like to highlight. These are the contributions that I have. Again, we believe that the current proposal is a very significant step forward in terms of having a European market that can continue to be and become even more a world leader in terms of equity crowdfunding, but also in terms of crowdfunding in general. And while we do think there are some points that may be tuned and may be improved upon, we strongly support the Commission's initiative on this, and we're looking forward to the development of an actual single market in financial terms. Thank you very much.